Praveen Rao is president at Infosys. Srikantan Moorthy is group head human resources at Infosys. We're coming to you, of course, from the Bangalore headquarters of the company, looking at fiscal 15 guidance and, of course, the full year and Q4 numbers which came out earlier today. Gentlemen, thanks very much. Great to have both of you here.
Thank you.
Mr. Rao, let me start with you. Let's talk about fiscal 15 and what you've said. 7 to 9% growth implies 2.1 to 2.9% growth every quarter, Q1 to Q4. But I just want to talk about Q1 and Q2 in particular. What kind of visibility do you have for these two quarters, and what should we expect? Because in the mid-quarter update, you said Q4 will look a little sluggish. Guidance will be at the lower end. That's what's happened. The spillover, I'm sure, will happen in Q1 and Q2. What's your reading?
See, I think if you look at the environment today, cost optimization is the new normal. Across the board, across industries, clients are looking at cutting costs and trying to reinvest back in terms of consumer-facing activities, in terms of front-end activities and driving growth. So discretionary spend is, while there is some positive momentum on the discretionary spend, but at the same time, when we looked at what happened in Q4, even some of the discretionary spend also came under pressure because of the volatility in the environment. So our expectation is, unfortunately, we are getting into this new fiscal with a very low exit rate or low momentum. The pipeline is decent, but the pipeline is limited to 3 to 4 months at a time, at any point in time, given the volatile nature of the thing. And in terms of areas of spend where we are seeing a lot of opportunities around cloud infrastructure management. We are seeing opportunities around the whole digital space, the mobility, analytics, and the whole SMAC world kind of thing. Net, I think for the year we have given a guidance 7 to 9%, and we are hopeful that we will. It's important for us to do well in Q1 and Q2 so that we can meet our
But
guidance.
when you said pipeline is for 3 to 4 months, what?
The visibility of the pipeline. Pipeline is decent, but today, given the volatile nature, I don't think, in most cases, businesses are not committing to a long-term thing. So most of the pipeline that we see are probably 3 to 4 months kind of thing. So that's the nature of the industry, and that's because of all the volatility that is happening out there. So we are not able to get full visibility for the whole year. So we are looking at the pipeline. The pipeline is decent, and if we do well in Q1 and Q2, the momentum will carry forward in Q3, Q4 kind of thing. And on that basis, we have guided for
Q4 pricing, blended pricing was down a little bit, and BG was telling me that pricing should be stable, but there's a downward pressure on pricing. Because margin guidance is I think 24%, around 24% or so, right? Like fiscal 14.
See, there are two aspects to pricing, right? One is the rate card. So by and large, the rate cards are steady. There is not too much pressure on the rate cards, and whenever we have rate increases, that comes. But at the same time, there is tremendous pressure on deals. Because it's a competitive nature, so in many of the deals to win, you have to go very aggressive. You have to price to the market expectation and then work backwards to make sure that we meet our margin requirements. So from that perspective, pricing is stable, but under a lot of pressure, particularly on large deals and those kind of opportunities. And from an overall margin perspective, I think while it's one aspect is the pricing, the other aspect is we are extremely focused on growth, so we will want to continue to make the investment which will help drive the growth. So I think the overall margin guidance has been given with respect to that as well.
I just want to talk about the attrition. I'm sure you get asked this quite a bit. So what is Infosys doing to control this problem?
So if you look at it from an employee perspective, what does an employee want? Right? One is, if I'm a high performer, I want to be recognized for it and get career progression. I want learning opportunities. And I also want to be able to talk to family and friends about where I work. Right? So now, those are exactly where we started and things that we're doing. For example, while we announced the wage hike, and you got the numbers, people who have done well and got promoted have seen as much as a 30% increase in their compensation. So it's a recognition of high performance. The second, we have created several new learning opportunities for people and relevant learning opportunities based on demand, looking at the new structure we created for talent fulfillment so that people can reskill themselves on new areas that are relevant for them to apply that knowledge. Last quarter, across development centers in India, we ran our program called the Petit Infusion, where people came with their families into the company for a one-day experience. And in fact, when somebody calls up and says, wakes up in the morning and tells their parent, I'm glad you work for Infosys. You know that you're building that emotional connect. So it's really about all three aspects, the financial value add, the educational value add, and the emotional connect. And that's really what we're doing to enhance this connect and the retention of our people.
No, because so attrition rate, quarterly attrition rate, 22.7. Is that the highest ever? Have you been ever at this level?
Yeah, so we are on the high end of our what we've seen in some time now.
Right.
So that certainly is an area of concern, I mean, no question.
Right.
But I think also recognizing what we need to be doing and what we are seeing now. I mean, it's exciting now that the company has doubled its growth. Right. Utilization has gone up to 78% from 71%.
So slowly you're starting to sort of fix that.
Right. So all of those play an important role in people getting connected and being engaged with the organization and therefore staying back.
Because it's also a loop, right? I mean, so
Yeah,
I mean, if growth comes back,
that's right.
There's excitement. People want to sort of stay, grow with the company.
That's right.
But at the same time, I mean, unless you get to very strong growth or industry rates of growth, because still there is a large difference. People leave, and that affects business. In turn, growth falls, and people leave. I mean, so how do you sort of fix that? How do you break that cycle?
No, I think as Tan said clearly, people are looking for career opportunities and career growth. So one aspect is growth. The second aspect also is we are focusing a lot more on internal reskilling. So with the effect that our dependency on external recruitment will come down dramatically, and we are able to create more promotional opportunity for people. So that also to a large extent should be able to, even with the 7 to 9% growth, if you are able to create more and more opportunities for internal people, although career mobility and so on, that will go a long way in addressing their needs. So we are doing multiple steps. We have done a lot of steps. We continue to focus a lot more on reskilling them and enabling them so that they get, I mean, their mobility within various groups also increases across technologies, and we are able to create opportunities for them.
As far as hiring goes, I think you've added about 2,000 employees on a net basis. For the year, you've added about 3,750 odd employees or so, right?
Right.
Just to sort of compare this against TCS, they've added about 14,000 employees over the first 3 quarters of fiscal 14. Of course, rates of growth have also sort of varied quite a bit. But what's your sense, I mean, on this employee addition metric?
Yeah, so now utilization plays a big role in that, right? So as the utilization number increases, then the need for adding more employees comes about, right? That's number one. Number two, we are focused more on adding now for coming here, people from the campus. So getting them from the campus does 2 things. One, of course, they get through a lot of training, which makes them attractive in the marketplace. But more importantly, from our perspective, it also gives us the opportunity to help them get trained on areas that are relevant to our business, and also gives growth opportunities for people within. Right. So that's how the numbers play out for us.
About wage increases,
Yeah.
You follow the April to March format now, calendar now.
Yeah.
So what should we expect?
So we just did that, right?
Yeah.
So that's what we announced for the March. So I think people are asking this question because ahead of time we've already given them the letters, right? This wage increase
another one is welcome.
Sorry?
Another one is always.
Of course. And we did twice already in this year, right? So by March 31st, for the first time in a long time, people got the compensation increase letters before April 1st.
So, I was chatting with Shibu earlier. So the 3 focus areas which all of you have spoken about quite a bit is sales, delivery, cost. Cost is the easiest to tackle, right? Margins now, after being in a secular decline, have started to rise at 25.5% or so. By when do we see, or rather, how do you see the first 2 elements of this strategy sort of panning out? How long will it take before we start to see the impact of fixing sales machine and fixing delivery effectiveness in the numbers? How long do we see?
So I think as if I remember right, when Mr. Moorthy came back, when he talked about a 3-year recovery, he talked about cost optimization first, which will take 9 to 12 months, and then sales will take about 12 to 18 months, and delivery is the last thing, because there we have to focus a lot more on automation and a lot more investment in those areas. So that's probably will lag behind these 2. So I think, as you rightly said, we are well underway on the cost optimization thing. Sales, we have done several initiatives, and we have started seeing momentum there. We are focusing on increasing the sales bandwidth. We are building the sales pyramid. We are looking at proposal effectiveness and so on. And on the delivery side, again, we have taken...
That also ties in with attrition, right? I mean, you know, middle level, senior management, but middle level, I guess, more.
Yeah.
Senior level exits get talked about quite a bit, but the guys who do the hard work, the senior guys get sort of a foot in the door, but the middle rung has to do the hard work, taking business forward, deepening the client account, etc. So you have to focus.
Right. So that's where promotion opportunities for them, learning opportunities for them, and compensation change for them, right? Makes the difference in our ability to keep them. We did significant number of promotions this time. The opportunity to get promotion through reskilling, right? Not only reduces the amount of people you got to bring from outside, but for internal people.
Sorry, I interrupted you.
Yeah. See, on the delivery side, we are focusing on multiple things. One is we are focusing on automation, building various tools to help in automation. Then we have several platforms. Because when you look at the from a client perspective, they are looking at reducing their cost. So cost optimization. So we are focusing on industrialization, coming up with tools, helping in through automation and through service improvement. We are trying to industrialize their current assets. Then we have platforms to modernize their current assets and migrate them to newer technologies and so on. So we have fair amount of platforms. We are trying to bundle them together and focusing a lot more on this. And lastly, clients are also looking at speed to market. So we have our own patented global agile methodology and vScrum IP, which is again helping clients in terms of, particularly in agile projects, helping clients in terms of speed to market kind of thing. So we are focusing a lot of investments on tools. We are also focusing on individual productivity improvements so that we can have focused interventions. We can also optimize a number of people.
But that will take time. I mean, it will take time.
These are all efforts underway, and as I said, it will probably take...
But the good news, I think, is that broadly we can say fiscal 15 will be better than fiscal 14. Can I say that?
I mean, we have given a guidance of 7 to 9%. So, I mean, that's the reality.
Yeah.
And we are doing multiple things, and we are very happy. I mean, even though quarter 4 was a tough quarter, overall we are happy with our performance in FY14 because we really doubled. Utilization has improved. We have the highest number of clients. So on lot of metrics we have done well in FY14. We are confident, but at this time we are looking at about 7 to 9% growth.
Fair enough. Mr. Rao, thanks very much. Stan, appreciate you dropping by. Great to have both of you here. Good luck.
Thank you.
Thank you.